Hello everyone, today I've got another special episode for you with a guest, Hal Press from North Rock Digital. Now all of you will know who Hal is, I think by now. He's been very active within the Ethereum ecosystem, especially over the last few months, and especially around this merge trade that he's bet his fund on, basically. So I had a really great conversation with him about all things the merge, proof of work forks, tokens, and everything in between. It goes for about an hour, so sit back, relax, and enjoy the conversation. Hey Hal, how you going today?
All good, all good. Thanks for having me on.
Yeah, no, I think this is going to be a really interesting conversation. We've been wanting to do this for a little while now, and what better, I guess, timing than 3 weeks, I think, before the merge here. So exciting times. It's funny because I first came across you and your work through the Bankless podcast that you did. And I remember I shared it on Twitter saying that, I've been a mega ETH bull for a very long time, but it just made me even more bullish, which I thought was impossible at that point. I was like, how can I be
Yeah,
more bullish on ETH? And I think that's because you came at it from a completely different perspective to what we've seen in the past, right? Like crypto tends to be very inside baseball. Like we don't really kind of think outside the box in terms of outside of crypto. We don't think in traditional finance terms. We reinvent things within crypto that have already existed in TradFi, and then we learn the lessons again for some reason. It's just this
yeah,
whole thing. Whereas you come from a traditional finance kind of like standpoint and background there, and that's why I think you got me so bullish on that Bankless podcast you did, because you started talking about a concept that I hadn't really put together in my head, and that was the concept of structural flows, right? And how that changes in crypto, and how there hasn't really been a positive kind of like structural flow for an asset, except maybe BNB. I think I saw you argue
mhm,
there. I think that's what
right.
got me so excited. But how is that just kind of like something that everyone looks at in traditional finance, and that we were just missing within crypto? Like it seems like we were just missing it for so long, and then you came and put the pieces together.
Yeah, I think a couple of things. First of all, that's just kind of I that's kind of my philosophy and process as an investor is to go very first principles on things. And I find myself, I don't really read too many other people's works and kind of listen to too many of other people's views. I do just to kind of get a sense of what's going on, but I try to kind of form all my own opinions from ground up, first principles. And that's really how I came to those views and why I think, sometimes I can come at things from different perspectives. Um, but in regards to the structural flows, it's actually not really something that's discussed that much in traditional finance. Um, I think in traditional finance, it's something that people miss as well. And it goes back to this idea of, what I wrote about this a little bit recently, but this idea of what I'd call like time harvesting. Anything that has positive net income, it doesn't actually need to grow in order for the price to appreciate. All that needs to happen is for time to pass. And I think that's a very underappreciated concept, even in traditional finance. People forecast these companies all the time, and they're so worried about growth and the multiple expanding, and they don't sometimes realize that you actually don't even need either of those things for the stock price to go up. All you actually need is the time to pass, as long as they're accruing cash flows. And I think that's why the equity market is such a consistent performer, is because it's very positive net income, and obviously over time passes and they accrue that earnings, and it goes to the holders. And that's what's going to happen with ETH after the merge, is they will start to generate positive net income, and so time will flip from being a headwind to a tailwind. And that's really what I think is so powerful, and that's the foundation for the structural flows. The structural flows are able to exist because there is that positive net income, and it's used as a buy flow.
Yeah, no, that makes a lot of sense to me. And I think if we're talking about time, I think crypto is probably more attuned to that because of Bitcoin halvenings, right? Like this has been a popular narrative forever in crypto. It's like the Bitcoin halvening happens, and then, sometime later the price goes up because of that. Now, obviously, it's very hard to quantify that. Does the price just go up because we have more participants in the industry anyway, and it naturally just flows up over time? It's kind of hard to quantify that. I've found in the past, but I mean, it's the same kind of concept. Like you have less flow, you have less kind of supply coming to
Mm-hmm.
market, you have the same demand, and if not more demand, and the price should naturally kind of go up from there, at least over time, as you were saying. I think some people view this trade, or I guess like the merge trade, or what's happening with the merge, as like an immediate thing, where it's like, oh, as soon as the merge happens, the price is going to go astronomical. Like I don't think that's going to happen at all. Like as bullish as I am, I think it's definitely a function of time.
Yeah.
But it's kind of a double whammy, I think, for ETH, because not only do we have this supply shock coming, because a supply shock in of itself or a reducing supply doesn't really mean anything without the demand to match it. Like if the supply is one and there's like no demand, then it's not worth anything, right? It's always worth as much as someone's willing to kind of pay for it. But I think the beautiful thing about ETH is not only do we have all that structural kind of sell pressure going to be evaporating essentially, we also have the demand drivers. Like for me, I don't want to kind of like crap on Bitcoin here, but for me, I always struggled with where's the demand for BTC going to come from? I know what narratives they have. They have like the sound money thing, they have the store of value thing, and all this other stuff that surrounds it. But personally, I never really bought into it because I'm more of a technologist. And I was like, okay, well, looking at Ethereum, the demand for ETH is huge. I mean, ETH is used as DeFi collateral. It's going to be used in staking. It's used as a store of value, as a money, within the NFT ecosystem, and all the stuff, and obviously to pay gas fees. So for me, it's like, yes, there's this supply shock coming, but we have the demand to match it, and the demand is a function of time too. Like we have these cycles, these kind of like bull and bear cycles, which dictate a lot of the demand for ETH as an asset. But I think, with that supply shock, with the demand remaining the same and then growing over time as we, all expect it to do, it's such a perfect cocktail of things coming together. And that's at least what makes me so bullish. But I think, as I said, like for me, you kind of put the puzzle pieces together in a different way I hadn't thought about, especially around that kind of dynamic where, as the price goes up, if the flows remain the same, then the USD denominated flows are going up, and you need more USD denominated demand to match that. It doesn't matter if kind of like if the ETH denominated is the same, it's kind of gets astronomically worse as time goes up. But now we have like the reverse effect happening post merge, where I mean, for 6 to 12 months it drops to zero in USD denominated terms, and then the demand for ETH is also, I mean, we believe it's going to be there to match that as well. So that's what really kind of, when I was listening to that, I remember like it just clicked in my head straight away.
Yeah, there's two things I'd say on that. Like one is, I totally agree with it's very important to think about it in USD denom versus ETH denom, where like the problem with the current proof of work situation is, as prices go up, it creates this reflexive sell pressure that gets larger and larger and larger in USD terms, pushing prices down, because the miners sell 10,000 tokens a day, whether it's $100 or $10,000. And so obviously, at $100, that's like $100,000, or it's $1 million, but then at like $5,000, it's $50 million, right? So that sell pressure increases linearly with price, and the problem is that the buy pressure doesn't, right? Because we're all paid in dollars in everything that we do. So when we have like DCAs and buy programs, it's just that it's a dollar denominated buy pressure and an ETH denominated sell pressure. And so like that's the core reason that I think crypto is so cyclical. Well, one of the core reasons that it's so cyclical in the way that it is because the very structure of the asset class is that when it goes up, it actually creates its own downfall, because it creates this recurring structural sell pressure that's much larger at that point and ends up pushing it back down. And then obviously when you push it back down, then that true sell pressure alleviates and it allows it to create a new bottom, etc. And then to go to the other point about the demand, well, one other thing that I think is maybe a little bit nuanced and underappreciated about that, I'll try not to get too in the weeds and too sort of like nitty gritty, but like if you think about, and this is one of the things I think is so powerful about ETH and this like this structural change that's going to occur, is we've built 7 years of behavior now. Like we've existed under this system for so long. So even if nothing new happens to generate demand, we've basically sort of cultivated and ingrained this behavior in this set of buyers such that they buy ETH every day, right? And ETH has come down to a price where that's the case, because they must buy ETH every day because the miners are selling it, otherwise it wouldn't be at an equilibrium. Basically, if we weren't at a price where there were buyers of those 10,000 tokens a day, it would go lower and lower and lower and lower until it found a price where there were buyers of the 10,000 tokens a day. And so, we've found this equilibrium over that time, and by doing such, we've created this base of buyers that does buy ETH every day. And like, there's a lot of people that just DCA ETH, just a portion of their paycheck goes into ETH every day, regardless of what's going on. And that's because it's needed to, because it couldn't find an equilibrium otherwise because of the miners. So once you strip the miners away, those buyers are still going to be there. They're still going to be buying because nothing's changed for them. But the person that's been selling them the tokens every day is going to be gone. So I actually disagree a little bit that you don't actually even need new demand. Like your point was like the supply reduction is one thing, but you need new demand or it doesn't mean anything. Well, I think the demand it's already existed, right? Like we've cultivated that behavior over 7 years such that the demand must exist or else we wouldn't be at an equilibrium. So simply removing the supply should actually be enough to create the price movement on its own without the demand. I obviously agree that there should be other new sort of demand drivers, but you shouldn't actually even need it because we found an equilibrium under current situation.
Yeah, I totally agree with that. I think I don't think we need net new demand at all. I think if we stay at the current levels, then yeah, I mean logically the price should trend up, considering that we're getting rid of so much supply. So yeah, I definitely agree with that that framing. And I think that's what a lot of people miss. A lot of people don't think in those terms where they and I guess like it's very kind of a crypto thing not to think in those terms because there's a lot of tribalism. I think that attributes to this, and people say, "Oh no one's buying ETH; they only buy it in bull markets." It's like, well, if no one was buying ETH, then the ETH price would be so much lower than it is, right? Yeah. And the popular narrative of ETH bleeding against Bitcoin has obviously been incorrect in a bear market. Has obviously been incorrect at this point. So I think that there is a lot of bad information put out there, and people just don't make these connections. That there is actually natural ETH buyers that buy all the time. I mean, I'm one of them. Like I buy ETH whenever I can, right? So like,
you're a good example. You're actually the example that I referenced in my first thesis.
Yeah, I remember reading that. I was like, oh, that's fun. But you know, obviously, just looking at me is funny because like I am one of the biggest ETH bulls, but it's not just me. Like there are a lot of quiet people out there who are just buying ETH, and
I know a lot of those people that just say like 2% of my paycheck, every paycheck, is just going to ETH for the rest of my life, and that's just how I do it.
Yep, exactly. So I definitely think that not many people have really thought about that 7-year base that you're talking about that is built up over time. And it's kind of, when you think about the move from proof of work to proof of stake, it really is a regime change, right? Like a very positive regime change. I mean, positive to us. Obviously, there are people who believe that it's not a positive, but I think the Ethereum ecosystem at large believes it's a very big positive, and it's a regime change that should lead to, I guess, like that feedback loop, right? Like it's not just a supply reduction, but it's the move to proof of stake. It's the energy narratives, the bad energy narratives going away for Ethereum, and we're not having to worry about it anymore. It's the fact that you can basically earn a yield on staking your ETH, not only on the block rewards, but now the fee revenue, right? So you can have a share in the network. So it's all this sort of stuff coming together. I think that unless you're deep in the weeds, it's kind of hard to make those connections, and I understand that. I mean, that's why I always say that I don't think the merge is priced in, because I mean, if people within the ecosystem, if people like me who has been bullish for so long is still learning new ways to be bullish, then I think like it just points to the fact that the merge can't be priced in, like at least in my mind. But I'm curious for your thoughts around the priced in terminology. Do you think people get that wrong a lot of the time? Do you think people don't have the right definition of what priced in means?
It's a really tricky and deep question. I would say, like, it's not binary, right? Like it is priced in or isn't priced in. It's kind of like, how priced in is it? It's not black and white. And I think also, I mean, I made this point in my article, and it depends on your time frame too, right? It really depends on your time frame. Like long term, I think that it's impossible for it to be priced in, because to price it in, if you just think about the flows, what would need to happen is approximately 10,000 ETH is 10,000 fewer ETH can be sold every day post merge. So that's right now equates to about $15 million. So what would need to happen is for the last 7 years, someone would have needed to be buying $15 million of ETH every single day for 7 years, and then for the next 7 years after the merge, they would have to be planning to sell that $15 million every day. That's how you would quote price it in. And so obviously, like, no one's been doing, and even if someone did do that, that would only price it in for 7 years. After the 7 years, it would no longer be priced in anymore. So like, depending on, like, if your time horizon is long enough, by definition, it can't be priced in. And then also, like, obviously nobody's doing that. So it's not priced in over the long term. But when you think about the short term and the medium term, you know, it becomes much more of a legitimate question, because, like, if there's $1 billion of, or let's say, let's just make the numbers really high to make the argument. Like, if there's $20 billion that bought ETH for the merge that plans to sell after the merge, it's going to take a very long time for that supply to chew through the 20 billion, assuming there's 0 buyers after the merge is successful. Now, I don't think that's the case, but like, you can certainly, it's not impossible for it to be priced in the short term. And so the way that my personal view is that it is still not priced in even on the short term, but I think it is more priced in than it was 6 weeks ago. Like when we were at the lows in June, and I would tell people like, the merge is coming in September, they would be like, oh no, it's not. It gets pushed every time. Like maybe it'll happen in 2023, like early 2023. And right now, like today, we got the mainnet merge announcement, right? So like that's clearly, the perception has clearly changed and people's positions have clearly changed with it. Like there's a lot of people talking about the merge now. 6 weeks ago, no one was really talking about it. Everyone was just like in shell shock about how bad the contagion of the Luna and 3AC blow up was. So like I think we're certainly more priced in than that. And if you look, like the best way to understand like has there been anything priced in is to just look at the traditional relationships, right? Like ETH is up still even after this latest correction, like 80% off the low. Bitcoin's up like 0. Solana's up like 0. Avalanche is up like 20%. Like Cosmos is up like 50% or something. Like all the high beta alt L1s that usually have a pretty strong, like just traditional beta relationship to ETH. So when ETH goes up, they go up more. When ETH goes down, they go down more. They're all up less than ETH from the lows, which tells you like this is a pretty, and it's not like one of them. Like you could look at a basket of 10 of them. They're all pretty much up less than ETH. And obviously Bitcoin is like not moved at all. So this move off the lows has really been a very ETH-led move, which tells you that like the market is pricing something in for the merge. So it's indisputable that something is priced in now, which by definition means it's more priced in than before. However, with that said, I still think there's a lot of people fighting the move, and I don't think all the people that are going to buy ETH for the merge have bought ETH for the merge yet. And then obviously I think there's a whole contingent of people that are kind of skeptical that it will occur successfully and will buy ETH the day it occurs successfully when they see that it's actually happened and they didn't want to take the execution risk. So I don't think it's priced in the short term per se, but I definitely think like it's kind of hard to argue that it's not more priced in than it was.
Yeah, I think that's a good way of thinking about it. Time frames are the most important thing, I think, when it comes to like debating that is it priced in or not. Because whenever I say I don't think it's priced in, well, I'm operating on very long time frames here. Like
it's not priced in over the next 10 years. Like it's impossible.
Exactly. And I think it's funny because when you think about the priced in stuff around people actually believing the merge is going to happen or not, I can actually forgive people for believing it's not going to happen. Maybe not now, but like over the last few months, because I don't think you were around in 2017, but
no, but I hear you. It's been pushed so many times. It's been 6 months away for 4 years.
Yes, the whole ecosystem was convinced that proof of stake was coming in 2017. Like you had, I think, even Vitalik saying as much. So I can forgive people for that. But at the same time, as you've said plenty of times, like if you pay attention to the core dev calls and the consensus layer calls and pay attention to the test nets, you knew it was coming, like, and you knew the actual roadmap quite a while ago now, actually, to get to mainnet. But yeah, there's still a lot of people who are skeptical. There's still a lot of people who get fed the wrong information depending on who they follow, and then they think that information is the truth, and they're like, oh, it's not going to happen. They're just lying. It's all a marketing stunt. And then when it actually happens and you can no longer deny reality, you look at it and then you're like, oh crap, like, do I buy? Should I buy? And you kind of get those FOMO people kind of coming in. But how much that counts for is another thing, because like short to medium term, it's very hard. So I don't know how much you think that counts for.
I mean, there's another thing too, which is like, it is actually a big task and a big undertaking, and it is not without risk. Like I think that there could be some issues with the merge. I don't think that there will be. I don't think it's the highest probability scenario, but I think it's non-zero. And I think that, so like there should be some risk premium priced in. And also I think it will be like a pretty big deal if and when they pull it off successfully. Like I think it should give people confidence in the dev team. Like I think it should be a fundamental catalyst in addition to everything else. So I think it should matter. You should have more than just like the FOMO people. I think there should be, reasonable people that buy it that day when they see everything happening successfully. It should be a vote of confidence. So I mean, we'll see, but I do think that it's a it's a fairly significant event. And I think also this is kind of one of the ways that it differs from a Bitcoin halving, is that Bitcoin halving is a flow event. Now, albeit it goes from structural supply to less structural supply, but still structural supply, whereas ETH goes from very severe structural supply to actual structural demand. So it's certainly even bigger on the flow perspective. But a Bitcoin halving event is actually a negative fundamental event. Like Bitcoin security actually reduces the moment that the halving occurs. So it's like a negative fundamental event, but a positive flows event. And because, like, as I say a lot of the time, and it's not rocket science, like crypto prices move on flows, not fundamentals. So Bitcoin tends to go up even though the fundamentals have gone down, because flow ends up ruling the day. But for ETH, it's a flows catalyst, but it's also a fundamental positive catalyst, right? Like the network actually becomes more secure the day the merge occurs. And the network becomes greener the day the merge occurs. And people become more confident in its security the day the merge occurs, right? So you have all these fundamental positives in addition to the flow positives. So it's kind of a bigger deal in that sense than a halving.
Yeah, and I think that's again a different way to look at things that people don't traditionally look at, because they always think, you know, Bitcoin halvenings are bullish because the supply halvens, but they don't look at the the network security going with that, because they assume that the price is just going to go up to match that. The price is just going to double, and then we back to the same security. And I think that
I even have a problem with that, which is that a network that's twice as big needs twice as much security. So yes, you can get to the same USD denom security, but it's not actually as secure because relative to market cap, you haven't actually changed anything.
Yeah, exactly. And I think that's very, very important and something that people don't think about very often. But, you know, in that kind of like sense of negative catalyst or negative kind of fundamentals, like, because this is topical right now, do you think the OFAC stuff has overshadowed the merge trade at all, or do you think it's like inconsequential?
I certainly think it's been relevant. I don't think it's inconsequential. I think it has caused some legitimate concerns. It hasn't concerned me particularly much because, well, first of all, I mean, there's a few reasons. But like to answer the first question bluntly, yes, I do think it's been a concern. But I think it's overshadowed the merge, not entirely, but I think it's been a negative on people's minds, marginally. And then the reason that I think it doesn't concern me too much is, well, first of all, there's absolutely zero indication that anyone is going to try to censor anything in any immediate time frame. And I don't think it would be very intelligent for the US government to try to do any sort of censorship via stakers. So I think it's a very low probability event. But even if they were to do it, there's actually plenty of defense mechanisms. Like you've already had the largest staking operator come out and say that they would first shut down their staking operation before complying with that, right? So like that's one thing. And then there's obviously been a lot of discussion around social slashing, which is another option. And I think ultimately what will happen is if any of these threats are credible, like the staking organizations will just move overseas. Like it's no different than these same vectors of attack are there with proof of work. It's just that the miners aren't all US based. But there's no reason that the stakers can't move overseas, and I think they would. And I think for that very reason, because like any rational, logical person can see that will be the course of effect if they try to go down this path will never be gone down, because the government, like, maybe people don't like that, but they're not actually that stupid. So like they wouldn't do something like this because they know that it's not actually going to accomplish the desired effect, and all it's going to do is just push these organizations offshore, which they don't want.
Yeah, I think that's an important point, because the government, you know, the OFAC sanctions is all about controlling, I guess, like the flows of money or controlling what North Korea has access to. I think that was the main purpose of it on Tornado Cash, right? But then you kind of expand that out and say, well, okay, what if the US government ordered stakers to censor certain things? It's like, okay, well, where does that stop, right? Does it stop at Tornado Cash, or does it keep going? And then what's the limit here? Like, you have to have community buy-in on a chain. You have to have people buying in and onto a chain. Like, no one's going to buy into OFAC chain if that happens, right? They're going to, like, it doesn't matter about the value of a coin. people are going to, the community is going to come together and say, no, we're going to reject this OFAC chain, even though there are these powerful centralized entities in support of it. Like we're going to reject it. We're going to social slash them. We're going to go and do our own thing. None of the core devs are going to work on OFAC chain, right? And like most of the app developers are not going to work on OFAC chain. So I think that's the balancing act, as you were kind of alluding to, where the US government can do certain things, but if they go too far, then they lose power to do anything. And that's not what they want.
Right. Yeah, and I think there's enough people advising the government that they would tell them like that's not a very good idea. Don't do that. And I don't think that they will do that. But it's certainly an interesting thing. And like I think in crypto, it's not good enough to say like, oh, it's unlikely to happen, so we don't have to worry about it. Like you should be prepared for all edge cases, regardless of whether I think it's likely or not. And so I think it's good that like we are preparing for this potential scenario, but like just as an investor myself, I don't attribute a very high probability to it, so it doesn't cause me to lose too much sleep.
Yeah, I think so as well. I mean, I think it definitely on the narrative front overshadowed the merge a little bit, but on the fundamental side,
like it overshadows it for like 4 days, right? Like no one's talking about OFAC fork anymore, right? There's always like a FUD thing that comes up. Like I'm sure that I promise you, between now and September 15th, there will be at least 2 more of these things that come up. Like yes. there just will be. Like I don't know what they'll be. Like but there'll be something.
That's the thing.
And
there's always
and they'll last for 4 days, and all the people that want to see ETH lower will publicize them, and then it'll get fatigue, and they'll move on to the next one.
That's it. And there's always something. That's the shifting narratives, the shifting goalposts, especially when something goes successful. Like, I mean, I've noticed that with the Bitcoin maximalist who for a very long time said that Ethereum would never move to proof of stake. And then it's undeniable that we are going to move to proof of stake. Well, now they've shifted the goalpost, right? They've shifted to something else. Like, so the haters are always going to find something to hate Ethereum about. It's just more filtering through that noise and realizing what's an actual fundamental concern and what is just news of the day, as you said.
Yeah, I think that's fair. And I think also, you know, just in the interest of like being fully fair and transparent and depicting both sides, like I think there are certain things that have changed since my initial thesis that have gotten more bearish too in regards to the merge catalyst. Like certainly when I wrote the initial piece, you know, we were doing like $40 million a day of USD denom fees. And that's like demand that has to be absorbed every day. And obviously now those numbers have come way down. So I still think that the merge is a very bullish catalyst because of the supply reduction, but I think it's probably not quite as bullish as if we had been doing the same fee levels as we were 6 months ago today. So I think there's goalpost moving on the bear case side, but I think we also do have to be honest about like the facts that changed on the bullish side of things as well. And I think the reality is, like, yes, activity is lower now, and that is negative. The price is also a lot lower, and I think a lot of that's priced in, and I think the supply reduction is plenty enough of a catalyst and a regime shift to change things anyway, but I don't think that you can ignore those things either.
Yeah,
like I updated my staking yield. I was projecting a 10% staking yield originally, and that's just not going to be the staking yield now. Mm-hmm. Like post merge, I think it's going to be 5.
Yeah, no, I think so. I think it's funny because the high fees lasted for so long. I think some people fell into this false sense of security that we'd never go back down to single digit Gwei. I think I sometimes fell into that. But at the same time,
you go ahead first.
I was just going to say, I think it's reflexive. I think as soon as the bull market can't even like starts coming back, the gas prices are just going to go up again.
Yeah, I think it's an interesting question. I don't know the answer. You might know better than me. I mean, I think certainly there's been a lot of discussion about, okay, ETH will be deflationary. Well, actually, ETH won't be deflationary if the merge happens right now. It'll be roughly flat supply, which is still extremely good, but it probably won't be deflationary. So that's like one thing that, you know, people should just understand in terms of expectations. And then regarding the fees, I mean, I do tend to agree. Like there should be that reflexive force. I think the problem is this rally has been so ETH-centric and not broad-based. It hasn't actually occurred at the same time as like an activity pickup. That there really hasn't been that pickup, right? Like prices up 80% and ETH denom fees haven't moved. So it's an interesting dynamic. I mean, hopefully it's just with a lag, and things will pick up as we get towards the merge and around the merge. But like, just again, in the interest of being, intellectually honest, we haven't seen it yet.
Yeah, and I think that's a consequence of just buying and selling ETH and just ETH going up. It's not going to add that much fee revenue to the base layer, because a lot of
Right.
the fee revenue comes from, the actual activity on DeFi, for example, especially around trading different tokens. And if you're so bullish on ETH and there's such a catalyst around it, then there's not really that much of a reason to go into different tokens. It's like you buy ETH sort of thing. But in saying that,
Yeah.
you have been very vocal about certain tokens that you think have a
Sure.
higher beta to ETH that I'd love to touch on. I personally, just for disclosure here, I own a bit of RPL and LDO, which is two of the tokens that you've spoken about. But no, I mean, I don't own them in any sizable quantity. I just buy ETH. But when it comes to these other tokens, are you playing them off the merge trade alone, or do you think some of them actually have the properties to outperform ETH over the long term?
Yeah, it's an interesting question. I'd say primarily it's around the merge event and the merge regime shift. I think that's not because I don't believe in them long term. It has more to do with my kind of investment philosophy. My investment philosophy is, your goal as an investor is to do nothing 90% of the time and pass on all sort of medium and low conviction ideas. And then when the high conviction ones come around, really take advantage of them, and only really express risk around those periods of sort of max conviction and max alpha. And I think that period is around the merge, especially for the liquid staking derivative tokens. And so it's so for me, it's more about maximizing that period of max conviction, and then after that, finding the next thing that I have max conviction on. Because I might think that these are good tokens that will outperform ETH over the long term, but it's a very marginal view after the merge, right? And so for me, it's less investable under my framework. And so I'd say that's probably why I look at it more as kind of a trade. But I do think that there will be big long-term businesses built here. So that's not to diminish their long-term potential.
I think we have very similar investment strategies and investment kind of like thesis when it comes to these things. Like, I understand the bull case for some of them. Like, I know that particularly Rocket Pool has been very, very vocal. Their community, I should say, not the Rocket Pool core devs, but the community has been very vocal about their bull case for RPL. And I actually agree with it. But depending on your time frame, it becomes very hard to outperform ETH just based on the prior kind of like history and the prior data. Not to say it can't, but it's kind of like, if you're trying to, if say you're buying a liquid staking token, it can be RPL or something else, for 5 years, and you're buying ETH for 5 years. Like, it's pretty much impossible to have any certainty around that token outperforming ETH. It's extremely hard. Like.
I agree, and it's sort of marginal, and that's why for me it falls in that sort of medium to low conviction bucket, which is like, those things might work and they may be positive EV, but it's just not within my framework as an investor.
Yeah, exactly. And my framework is outperforming ETH. Maybe other people's isn't. Maybe they're happy just outperforming USD, and they want to support the community. They want to have a stake in the community, because obviously when you buy a token, even subconsciously, your stake in that community goes up, right? Like, you pay more attention to it, you're more invested in it, literally and non-literally. So I think if people are doing it for that, that's fine as well. But for me personally, I just want to stack ETH, right? I don't want to give up give up ETH for something else. But I understand people who do that, and maybe they are doing it as a short to medium term thing as well. Like, not everything has to be a long term investment. The HODL culture of crypto has kind of poisoned the well a bit, where it's like people think everything needs to be a long term thing. When no, you can do short to medium term bets, but you have your long term kind of stack as well. I mean, obviously you and as an investor would do this, where you kind of have percentages of your portfolio in different things based on different time frames, right?
And for sure. And I try to be kind of very open and upfront about all these things, so as to avoid like misconceptions. Like, I say this all the time, right? Like, I am a self-proclaimed profit maximalist. Like, I will never say otherwise. Like, it just is what it is. I'm an investor. That's my job. My job is to maximize dollars, not like be married to any ethos. So like, that doesn't mean that I don't care about these things. It's just, it just shouldn't be my priority, because that wouldn't be honestly fair to my investors whose money I manage, right? So like I try to be very open and upfront about these things, and as a result, like I said before, like it's just there's a million different things you can look at, but I'm always trying to find the few things that have highest conviction on. And so I end up, I think this is just generally true in crypto, and it's kind of interesting. Like there's a million different pumps you can chase. Like there's 10,000 opportunities at all times. And I'll have people kind of pitch me ideas, and I'll be like, that's a good idea. I think it'll work, but I'm not going to participate in it because I just don't have the time. And I know that if I try to do that, like I will just be spread too thin, such that it will take away from everything else I'm trying to do. Like I think that's important in crypto, is kind of managing that bandwidth, where it's like if you try to chase every pump, you will end up catching no pumps. But if you just focus on a very few sort of like high conviction things, and you do the diligence and you build the conviction in them, you have a much better chance of capturing them and monetizing them appropriately. And I think in crypto, like it's so volatile, this actually takes on an added importance, because it's very easy to get shaken out of positions. If you haven't done, and I've learned this, right? This is another thing I say all the time, like the best lessons you learn in an investing period are from losing money. And like when I got started in crypto, like I made this mistake a few times, which is like you would try to chase things without doing like full diligence and having full conviction in the idea. And inevitably what will happen is crypto is volatile. And as soon as that thing underperforms like 5%, and and it has some big seller, you lose your conviction, you start to doubt yourself, and you panic. And that's going to happen in anything that you own. Like there's always going to be that volatility. And so if you haven't gone through the process of kind of building the conviction to hold through those periods where things don't look as good as you think they should look, you are destined to fail, because those periods will come. And so I think it's very important in that context in crypto to really like understand that you don't have to chase everything. And the things that you do chase, you should really like have built a strong view in, just that you're not very fickle and fragile in your holdings, and you will hold through your thesis unless the facts change.
Yeah, and I think it speaks to what I always say, and I always tell people, it's like you need at least 2 cycles to understand crypto, because the conviction point is very true. Like you can have so much conviction on an asset and think it's the most bullish thing in the world, but it can still go down 80-90%. I mean, ETH literally went down like 85% from its all-time high. With all of those fundamentals, with that, high fee revenue, with the merge coming. So it doesn't matter, how much conviction you have on something in crypto, and it doesn't matter how bullish it is. It's so volatile. Like it's still extremely volatile, because
there will be volatility.
Yes, there's no trading
question.
halts, right? It's very unregulated still. There's so much leverage in the system. We saw it go down because of all that contagion. Like people thought, oh no, we're never going to have like a big crash again because there's not that contagion. I'm like, what are you talking about? Like Terra blew up, then 3 Hours Capital blew up, then this blew up, and this blew up, and all these people are like insolvent now. And then you had these forced sellers, which just pushed the price down even more. So I think people in crypto, you have to be in a couple of cycles to realize that it's always the same kind of thing, like too much leverage, and doesn't matter how bullish you get on something, it can go way higher than you think it can, but it can also go way lower than you think it can in a span of a few months. So I definitely agree with that. And I think that on the positioning thing, where you try to chase like 10 different things and you end up losing on all of them, it's an attention thing at the end of the day. Like we're humans, we don't have the ability to pay attention to 10 different things individually. We have to have a team for that. That's why the big investors and big kind of investment firms, they have hundreds, thousands of people looking at this sort of stuff to just inch out that extra alpha and to beat like indexes.
And I actually think like even at the investor level though, that's a common mistake. Like anytime I speak to a hedge fund, like crypto or equity fund, that's like, we hold 50 longs and 40 shorts and we have a diversified book, I'm just like, good luck. Like it's just, I just don't have a lot of faith that strategies like that can actually generate alpha, especially after all the execution cost and the slippage that you incur. Like I'm much more of the opinion that you want to have a very concentrated book. You need to learn how to risk manage with concentration, because that's the obvious kind of sacrifice that you have. And so, we will never ever be greater than 100% net long or net short. Like, I don't think that's just not something that we would do. But I do think that having those concentrated positions opens up a lot more potential for alpha generation long term.
Yeah, I agree with that. And I mean, the leverage thing, it's literally the position killer. It doesn't matter how small or big you are, like it's the same thing. I mean, it's actually just still crazy to me that 3AC took on so much leverage and just blew themselves up.
Yeah,
Like,
I mean, they were like,
even the worst kind of like probably one of the worst like altcoin investors and lost like 90% of their money, they still did better than 3AC because they didn't lose 100%. But I think that's something that gets a lot of new people off guard too, because they come in with not very much money and they're like, well, how do I maximize my returns here? Oh, the exchange is like, here's leverage, like Binance, especially, which is obviously very popular in FTX. They're like, here's leverage. And there's no real risk disclaimers around that. There's no like, this is a high chance that you're going to blow up. It's like, here's a way to make outsized returns and obviously outsized losses. But I think a lot of new people are attracted to that and they get wrecked, right? And that's why, again, I go back to, you need to experience a couple of these cycles. You need to be in the weeds. You need to be paying attention to actually get the wisdom to be a better investor. And I think that's true for all investing, not just in crypto, right?
Hopefully only one cycle. Otherwise, I'm going to have to get burned by another one.
Well, you have prior experience, right, from other markets?
Yeah. In other markets, yeah. But I certainly learned a lot this like past 6 months. Like I think when I launched the fund, it was December 1st. It's funny actually. We launched the fund basically at the peak of top, and we had a pretty large ETH allocation, like very large. We launched the fund at 4650. So there was a lot of lessons learned. We've done okay, but there was a lot of lessons learned. And then I think one other thing, like in this context, I don't know if you want to talk about it, but there's another potential set of tokens that I think is interesting through the merge that I haven't talked about as much, which is all of basically the Arbitrum ecosystem tokens. I think the timing of the Arbitrum Odyssey aligns particularly well with the merge, and it's kind of one of those stars aligned situations that makes for another pretty interesting way to kind of try to outperform ETH. So I don't know if you want to talk about that one, but that's another one that we could discuss.
Yeah. I mean, definitely. And there's also the proof of work kind of forks and the tokens around that as well that we could talk about. We can talk about the Arbitrum thing first, or I guess like just the timing there. I mean, personally, I avoid talking about app layer tokens because they're just so hard to invest in. Like it's just so difficult.
I mean, we don't even have to name names.
Yeah. I'd be interested in your thinking around it for sure. I think the listeners would as well.
Yeah, sure. I mean, like I said, we don't even have to name names about like specific tokens. But I think, well, first of all, I think we're pretty firmly entering L2 season. Like Optimism and Arbitrum are gaining real traction to the point where they're actually getting more activity than some alt L1s. Like the L2 thesis is actually playing out, and there are actually cool, interesting things going on L2 chains. So that's kind of like a backdrop. But with Arbitrum specifically, there is this I don't know what you want to call it, this thing called the Odyssey, which is going to restart after Nitro launches on August 31st. They haven't given an exact date, but the assumption is that it will start very shortly after Nitro restarts on the 31st. Call it sometime in the first or second week of September, which is exactly in the lead up to the merge on September 15th. And my assumption, and I'll just talk about this from my assumption, so we can just like, none of this is factual. These are just my assumptions. Is that the Odyssey will restart then. And the way that the Odyssey works is basically, the point of the Odyssey is all these users have to go through and complete all these different tasks within the Arbitrum ecosystem to get these NFTs, which are markers of their having, like, they're kind of like popes, like for having done these actions. And the assumption of the community, and my assumption as well, is that there will be some relation between completing those tasks and getting the Arbitrum token airdrop. I don't know the exact connection, but there will likely be some connection. So as a result, there's a very large amount of very interested users in the Odyssey. So I think like the Odyssey already had its beginning, and it was started as like the first week. It goes week by week. The first week was a bridge week, and I think Hop was the most used bridge. But they put like hundreds of thousands of users through Hop to get their Odyssey sort of NFT. And so this Odyssey is going to restart, and it's basically going to direct hundreds of thousands of users through various Arbitrum app layer protocols in exchange for probably giving them some future benefit with Arbitrum airdrop. And so you're going to have all these people that are just like fervently going through this Odyssey, using all, like, being effectively forced through these different application layers, these different applications. And just from like a mind share perspective and also a TVL and activity perspective, that's obviously a very powerful dynamic. So I think if you can try to look into, you know, which protocols you think are going to be part of the Odyssey, and are therefore, you can predict basically in advance, okay, this product is going to get hundreds of thousands of new users and hundreds of thousands, or not hundreds of thousands, but tons of new attention on social media and tons of people talking about it. And it's not rocket science then to figure out that, okay, maybe this token will perform well over that period of time. And it just so happens that period of time directly aligns with the lead up to the merge.
Yeah, no, I think I agree with your overall thinking and assumptions there. I've been very bullish on L2s for a long time, but I think your kind of, I guess, thesis or thinking around the L2 thesis actually playing out is true now. I mean, up until this point, there hasn't been that much activity, but now it seems to be growing, and it's kind of feeding off of itself. And it's funny because the Odyssey stuff, they paused it because they hit their limits. There's
too much activity.
Limits. Yeah, it's too much activity on the network. So with Nitro, I think they're going to 10x the amount that they can handle. I wonder if that's enough sometimes, because the demand seems to be going up, and also because, like, you give people more block space, they're going to use it at the end of the day. Like, developers are going to use it. They're going to create more heavier applications that take advantage of this extra scalability. So I do wonder what that's going to look like. But I agree with you that it's just another attention sink there, right? Especially post-merge, where people are like, okay, what do we focus on now? You know, the merge is done.
I definitely agree with that. Like, I definitely think post-merge you could get a rotation into L2s and L2 ecosystems.
Yeah, exactly. So it's going to be interesting to see that play out for sure. And I obviously, as an ETH maxi, I love seeing L2s eat into the L1 market share. I think the L1 stuff's kind of funny because it was such a huge thing late last year, like I guess like the 6 months of last year probably, and it was such a huge trade. But you know, ETH, even just like with the fact that it's like, as an investor, you look at the tokens that are available to you, and maybe you look at ETH and other L1s, and you're like, okay, well, ETH is going to zero new supply entering the market in the next 6 to 12 months. And you have these alt L1s where there's a lot of supply overhang, especially from early investors and potentially team. And the way I look at it is like, well, then why would any investor really want to pile into these L1s, especially because they're losing market share to L2s as well? So, like, I don't know. It's kind of, when people come to me and like, oh, I'm bullish on this L1. I'm like, but why? Like, the token doesn't have any value accrual, and then it's competing with ETH, and it's competing with L2s, and it's like, so, and people call me an ETH maxi for having that view. It's like, I'm just looking at the facts at the end of the day. Like, the facts are that ETH has going to have a much more positive, I guess, as you put it, structural supply kind of ecosystem.
Just tokenomics broadly.
Yeah, tokenomics, I guess, is the right term there broadly than something like an alt L1, but something like a lot of the tokens, like not just the alt L1s, a lot of tokens have these overhangs, and they don't have the demand drivers that ETH does. They don't have the product market fit that Ethereum does as a network. And that's kind of my whole view on it. And I always come back to ETH because of that. But I know one other thing I wanted to kind of talk about as well with regards to the merge trade was proof of work forks. Like, do you think that they're going to like be something that people take advantage of through, I guess there's this trade spot ETH, long spot ETH, short, I guess like futures ETH, or do you think it's kind of something that I
love people doing that trade.
Because
I love to take the other side of it.
Explain why. I'd love to hear your thinking around that.
Well, firstly, like broadly, I mean, there's some context on the fork. I don't think that the fork is going to be a very successful or viable long-term project. I think that Ethereum Classic already exists and fills most of this void, and already has existed for a while, and it's going to have much better tokenomics than this other fork. It kind of fills everything that this other fork will do already. So there'll be this competition between this new fork and Ethereum Classic anyway. And the bigger thing is just every holder of ETH is going to get free tokens that they can dump for free money, and they're all going to dump. So like initially this fork is going to get just absolutely wrecked, I think. Like I think it will just be nothing but sellers until it gets to a very depressed valuation. So like there's people paying, 3% to buy the fork right now, which is basically a $6 billion market cap. I think most ETH holders would very happily sell this at 6 billion. So like why you would step in front of that to buy the fork in advance doesn't make a lot of sense to me, because you can just wait till like the day the merge occurs successfully and you'll be able to buy the fork at well below that valuation, I would imagine, because literally every holder is going to be trying to dump on you. So like I don't really understand the need to go and buy the fork in advance when you know there's going to be this absolute rush of sellers. So that's the first thing I'd say. And I also don't really believe in the long-term viability of it. However, I do think there's a potential for it to catch a narrative. So like I would imagine that the trajectory of the token, it follows similarly to a lot of other airdrops, where like it launches at a price, gets completely wrecked for multiple days, and then everybody ends up selling it at depressed valuations. And then at that point, it's pretty washed out, and it has like a squeeze on thin liquidity, makes new highs, and then just bleeds out into like eternity. So it's not to say that I don't think the fork will ever have a run. It's just that I don't think it makes any sense to pre-buy your fork in front of massive known sell pressure. So for me, I'm actually doing the opposite, which is I'm selling all my forks in advance because I'd like to sell before everyone else sells. So the way that I do that is I just swap my spot ETH position for the futures contract that everyone else is selling to try to get the fork. So basically, like I swap my spot position for the DEES future, which trades $30 below the spot ETH and should have some backwardation after. So you're probably capturing like $35. And before, like when I was doing most of it was even higher. It was at like $40. So I'm basically like taking in $40 of free money in exchange for giving up my right to receive the fork. So in essence, I'm selling my fork for $40 before it even happens, right? So for me, that seems like a pretty easy and successful trade. Like even if I'm wrong and the fork is higher, like I'm happy to take my 3%. Like if I give up a couple percent, it is what it is. But my guess, my strong belief is that should I want to buy the fork, I'll be able to do so on day one at significantly cheaper prices.
Yeah, and I think it's funny when you thinking about that, because there isn't just one of these forks from what I've seen. There is like 2 or 3 of them, and it's like, okay, well, this is just fragmenting attention even further. So
yeah,
if there is like 2 or 3 that go up, and then people are like, okay, which one do I buy, right? And then everyone's trying to sell every single fork. It's kind of like, where's that, as you're saying, where's that buying going to come from? Maybe when the dust settles and everything's calmed down.
I mean, to maintain this market cap, right? Like all the tokens are distributed day one. So if you really think that this is going to have $6 billion market cap, let's just assume that half the people sell their forks, which I think is probably light. It's probably greater than that. But let's just assume half. If it's going to maintain a $6 billion market cap, you're literally going to need to find $3 billion to buy it.
Mm-hmm.
There is no chance there's $3 billion of money ready to buy an ETH fork the day after the merge. There's simply no chance. I mean, I don't believe ever in absolute certainty. So I will not say there's no chance, but there's very low chance.
Yeah, no, I think so. And I got the same kind of like thinking around that as well. I don't know who these buyers are going to be, especially in that size. Like there's probably going to be some buyers, maybe some people who don't understand the dynamics around it. But yeah,
I think there will be buyers at very depressed prices. Like if the fork goes to $500 million market cap, like I'll buy some.
Yeah.
And I think other people will buy some there. And at that price, you only need 250 million of buying power to absorb half the supply. So I think that's like a potential scenario. Like I think, there probably is 250 demand for this kind of fork. And so I think something like that is what will end up happening. It probably won't ever reach 250. It'll probably be like, I could see it going to like 1 or 2 billion and kind of like absorbing $1 billion of sell pressure there. I think that seems reasonable to me. But so if I can sell it at 6 billion and I think it's going to go to 2, it's a pretty positive EV decision.
Mm-hmm. Yeah, no, I think so. And it's kind of like, I mean, I think it will just fade away over the longer term. I don't think it's going to have any longevity at all, especially because like I don't see anyone wanting to build on it. Everything's just going to blow up and it's just going to have like a really bad start from all the dumping. So I guess it's all speculative.
Like the long-term prospects, I'm certainly not a believer in.
Yeah.
But like just talking about like the short-term pumponomics is another question.
Yeah, definitely. I think so. And I think it there will be some of that because it's funny because like even if people are in the know like you're still going to take that because you're counting on other people like just being speculators as well at the end of the day, and you're like, well, you know, if I can be a smarter speculator than them, then I'm going to take that trade, and it makes perfect sense. And I think that's why people get caught off guard by a lot of the just absolute trash pumping in crypto. It's like, well, it's pumping because there's kind of this self-fulfilling prophecy of all these speculators coming in, right? And then you just need to be smarter than the other speculator and get out before they do. To win, right?
There's a lot of PvP games being played here, and I think that's right. And like, you know, like I said, like I'm a self-proclaimed profit maximalist. So whether I believe this fork has any long-term value or not is completely irrelevant to the decision to buy it at 500 million market cap, because I think other people will pay me 3 times that at some point in the future, right? Like that's just you have to be able you have to be able to like separate those things as an investor, especially in this space where the fundamentals are so opaque. Or otherwise you just will fail. And then the other interesting trade, this one is a little bit more nuanced. I'm happy to talk about it, even though I don't have my full position on yet, because it's like so few people are set up to actually do it. I don't think that it'll move the price. It's more of just like an interesting one. But there's a pretty reasonable dislocation, in my opinion, between the SEP and these future points, where I think it seems to me that, and I'm curious to get your take on this, but it seems like the market is pricing in a pretty sizable scenario that the merge gets pushed past September 30th, which in my opinion is extremely low probability. But basically the September futures point trades about $15 above the December's future point. And it doesn't really make any sense to me because the March futures point is above the December's futures point. So like the rest of the curve is implying what's called contango in the futures market, so like an upward slope. But specifically this SEP-D's point is backwardated because I think they're pricing in some chance that the merge gets pushed past September, in which case the September point would go back to spot and the December point wouldn't. If you believe that the curve will be contango from SEP to D's after, it's pricing in like almost 50% chance of delay, which to me is just an absurd mispricing. I think the scenario is probably closer to like 2%, if that. But I guess I'm curious though, like you probably don't think about this too much, but do you have any views about what the shape of the futures curve will look like after the merge? Because it's an interesting question actually, because like on the one hand, ETH will be a yielding asset now, but saying that ETH's already a yielding asset, like not much is changing. Like ETH gives you 4% yield today. I think it will give you 5% yield post merge. Now, yes, the 4% today is not a real yield, and the 5% after the merge is a real yield. So it's a pretty big deal, even though that nominal shift is small. But as far as the futures market is concerned, they don't care about real yield versus nominal yield. It just prices in nominal yield. So like, but anyway, post-merge, there will be a 5% yield. So you could make an argument that the curve should have backwardation, meaning like the futures trade below the spot, because otherwise you could sell the future above the spot, buy the spot, stake the spot and get the yield and collect on both legs. But typically that's not what happens, and what happens is that the futures actually do trade above spot because people are willing to pay a lot for the ability to get leverage and not actually have to put up all the collateral to buy the spot. But I'm curious if you have any views. I wouldn't like you. It doesn't matter if you don't. But I'm curious for any views on how that futures curve will look after the merge.
Probably not any views on the futures curve itself. It's definitely not something I pay that much attention to. And you're obviously more versed in it than I am. But in terms of like the probabilities of the merge going past September 30th, I mean, it's always a possibility. But like I don't know how anyone could think that unless okay, say the merge doesn't get delayed and we don't push it back ourselves, and for some reason TTD,
yeah, hash rate could move. Hash rate
yeah,
could move.
exactly. So you're more
hash
betting
rate
on
would
that.
have to move by so much at this
Yes.
point.
Yeah.
So much. It would have to. It would have to have.
Yeah, it would
Yeah,
have to go down considerably. Yeah. Yeah.
It would have to
Yeah.
go down 50% today and
Yeah.
remain 50% through the end of September.
Yeah, with a potentially and highly likely rising ETH price, which means the rewards are going up, right, for miners. Like miners are still earning the rewards,
and
right?
hash rate has been stable for an extremely long time now, even with the merge coming. So like I think that's like a 1% or probably less. It's a sub 1% probability scenario.
Exactly. So I don't
like the
understand that.
So I've put this trade on, and I'm probably going to continue to put it on because I think that the merge will happen then, and I think basically once it happens, the SEP and these points will pretty much trade in line with each other. But that's like another example of how you can kind of take advantage of people pricing in these forks.
I think it's probably an information asymmetry thing where a lot of people are just getting the wrong information about the merge and how it all works. Because to be honest, like
I hope so. I hope I'm not missing something about the shape of the curve. I've done a lot of diligence on it, and I can't seem to find any reason why I would be missing something.
I can't think of it either. I mean, maybe it really is just the complexities of how it's going to happen, right? The TTD is not something simple to understand in how it actually activates. The fact that the merge has been coming for 6 months, like, the next 6 months in perpetuity. It could be just all of that confluencing to cause this rather than anything else. But I mean, I don't study the curves really ever. But
my honest sense, just like to close the loop, is that I think people are extremely short the December point as the most common point to try to capture the fork. So I think it's just artificially depressed, but we'll see.
Yeah, I guess that would make the most sense probably there.
I think it's just positioning, but we'll see. We'll know on September 15th.
Yeah, exactly. All right. Well, that might be a perfect place to end it today, unless you've got anything else that you thought we should touch on, but I think we touched on a lot, and I think this is going to be great. I think people are going to definitely enjoy the whole talk here. But yeah, thank you for coming on and talking to me, Hal. This has been great.
I appreciate you taking the time.
Yeah, for sure. And I think, we're all obviously very excited for the merge, looking forward to it. So at time of recording, it's only about 3 weeks away. So yeah, good merging, I guess. Is that a thing we say these days? I don't know, but good merging.
I'm good with it. Today was the official mainnet announcement, so it's a good day for it.
Perfect day, exactly. Well, thanks again, and I'll see you later.
Thanks, man.